Oliver, the solution to the crisis in Cyprus taught us two things and raised two questions. One, why anybody in the Eurozone anymore would have deposits over 100,000 euros, why wouldn't you spread the risk? And I guess the second question is, why haven't deposit rates gone up? Because it's quite clear that deposits are riskier than they were. Is that not right?
It is, and logically you'd think that those sorts of things will change as people look at what's happened in Cyprus, where people with over 100,000 euros in an account face losses of up to 60%. People will firstly start to spread their risk, start to put it into pots of less than 100,000, or they will say, fine, I will leave my money in pots of over 100,000, but I will demand a higher return for that risk. I'll want a higher interest rate if I think there's a risk that some of my deposit could be bailed in the event of a distress for the bank.
And that would directly hit banks' P&Ls, wouldn't it?
Yeah, absolutely. The Barclays analysts have done the calculations. They think it could wipe 6% off profits for the European banking sector. It'll affect some banks more than others because of the different structures of balance sheets across Europe. But nevertheless, the higher deposit rates will mean lower interest margins and lower earnings for the banks.
And how sophisticated do you think the average retail investor would need to be to discern what a risky bank is and how to demand a higher interest rate? It's tricky stuff, no?
It is very tricky, and a lot of people may just decide to leave their money where it is. Lethargy may perhaps save the banks from paying more, although you would hope that the big corporate depositors and the big banks, which have treasury departments looking after this kind of thing, you would hope that they would be sophisticated enough to do the maths and decide where it's more risky to put their money. And that in turn should send a signal to retail depositors that the higher interest rate you're getting, the more risk you're taking. It's the same in any field of investment. High return is only a reward for higher risk. So if you're being offered a very large amount on a deposit account, you need to ask why that's the case.
And you have any contradiction here, don't you? Because normally for banks you're better off being more leveraged. But in this particular case, you almost want to give out the signal to retail investors that you have a larger capital base and therefore you should come and bank with us effectively.
Yes, absolutely. That would be a way to get retail investors to put their deposits in and to generate a lot of fairly cheap funding that way. If you're a strong bank, you could also use it to once you have that relationship, to sell more products, which is an added benefit to those that can demonstrate that they're strong.
Well, we haven't seen any notable rise in interest payments yet, but certainly is the case that we should be spreading our money. I will certainly be doing that first thing tomorrow morning. Thank you very much, Oliver.